Hey folks, welcome to another product review at Finominal. Today we're going to look at the largest quality ETF in the world, which is the iShares MSCI USA Quality Factor ETF with the ticker QUAL. Now, the fund manages around $40 billion, charges 15 basis points, and selects stocks based on return on equity, on low leverage, and on consistent earnings growth. Now, let's see how this fund has done versus its benchmark. And what it's worth mentioning is that QUAL is a passive ETF, so it tracks an index. And so also just the benchmark, which is the MSCI US Quality Index, is exactly the index that's being tracked. So we're going to ignore that. We're also going to ignore the S&P 100 as a benchmark because we do know that QUAL selects in mid-cap and large-cap stocks, so the Russell 1000 index is more appropriate. Now, we see the R squared of the ETF to the Russell 1000 index is 0.93. Mostly the tracking errors on the lower side. And more importantly, we see the performance here over the last 10 plus years. Now, we do see that most recently QUAL has outperformed over the time period. Having said that, if you look at this as various different points, this is, I would argue, more luck lately or more random. So while it seems to be a fairly close performance, zone performance to the index itself. Now, the other thing that we want to look at is how different is the portfolio of the quality ETF versus its benchmark. And for that, we're simply going to go to the security analyzer and we're going to look at the quality ETF versus its benchmark. We're going to use IWB, which is an ETF tracking the Russell 1000 index. And we're going to look at the fund overlap analysis. Now, we do see that the quality ETF has a portfolio of 129 stocks, so it's very well diversified. We see naturally there's a lot more stocks in the index, and we also see an overlap of around 127 stocks. Now, percentage-wise, that equates to an overlap of 38%, which is on the higher side. So that gets you to an active share of around about 63%, which is low. Now, that simply means the lower the active share, the less opportunities or possibilities are of outperforming. And 63% is mentioned on the lower side. Now, let's move on and see if this ETF is doing what it's supposed to do, which is provide exposure to the quality factor. Now, we're going to use the Know Your Factors tool. And we have a definition for the quality factor that is effectively a combination of return on equity and leverage. So very similar to how the product is comprised. We should make sure that we have the right benchmark. And now what we do see here is that indeed the ETF does provide consistent exposure to the quality factor. That's great as per its design. We also see slightly positive exposure to low volatility over time. We do see that on average exposure to value, momentum, and size is pretty much zero, slightly negative, used to be more extreme. But so you're getting what you're paying for. Now, the other aspect that's worth mentioning is that if you look at this from a holding space analysis versus Russell 1000, is that on various valuation metrics like price to sales, EBITDA, effectively compared to the index itself, that the quality ETF is more expensive. You can see the bars are all red. And that, of course, brings us to the topic of outperformance. And if you can outperform the benchmark with a quality product. And the short answer is no. Most people don't like to hear that, but with quality stocks, there's no rationale why you should be able to outperform. You know, most stocks are quite expensive. They're lovely stocks. They're low leverage, high profitability. Who does not like them? Having said that, that doesn't prohibit you to generate a higher Sharpe ratio with quality stocks, right? Of low drawdowns and low volatility and so on. So let's have a look at that. And there's nothing wrong with generating higher risk-adjusted returns. And so again, we're going to compare this to the Russell 1000 index. Now, if you look at this from a Sharpe perspective, So we see the Sharpe ratios over the last 1 year, 5 years, and 10 years. Actually, over the most recent period, there has been much more higher Sharpe of the QUAL ETF. Having said that, over a 10-year period, the Sharpe's almost identical, which is kind of like disappointing. I would have expected more. Now, we can also look at the aspect why people buy into quality stocks, which is usually when they are concerned about the stock market or the economy. And we can look at stress testing. So where effectively we see the performance of, well, actually, let's move to drawdowns. We can see the performance of the quality ETF in terms of rolling drawdowns over the last 10 years. Now, what we see is that in certain periods, the quality ETF, which is a yellow line, like here, for example, or here, has done better than the Russell 1000 index. Having said so, that was not always the case. So, for example, in 2022, when bonds and equities declined, you had a larger drawdown with the quality ETF than with the S&P 500 or the Russell 1000. Now, why is that? That's actually quite easy to reconcile, and we can do that by looking at the breakdown by sectors. So if you look at the quality ETF, that has an overweight in tech stocks, 50% versus 37% for the S&P and the Russell 1000, simply because tech stocks on average tend to be lowly leveraged and some of them are quite highly profitable. And you had an underweight in financials. Now, what happened in 2022 is that interest rates went up, given that the Fed wanted to decrease inflation. That was beneficial for financials, you're underweight, and not so beneficial for tech stocks, which was the overweight. So that's quite important to note that with a quality themed stock portfolio, there are periods, of course, when you have a low drawdown, and that's what most investors expect, but that's not always the case, as we can see in 2022. Now, maybe to wrap it up, to see if there's any instrument that is kind of like similar, but perhaps better or cheaper, give a quick look with regards to the fee reducer. If there's anything out there that might look more attractive. And what the fee reducer does, it tries to screen all ETFs and mutual funds for securities that are similar from a factor or style perspective, but are lower cost. And so here we can see that the quality ETF is charging 15 basis points per annum versus this other ETF is charging 4. Now that is also an iShares product. It's the core S&P US growth ETF. And you can see from a performance perspective, actually, it was slightly more attractive. We could also look at it from a Sharpe perspective, they're both similar, but interestingly, the drawdown of that cheaper vehicle was lower. Doesn't look like a perfect comparison, but interesting to think about. And that kind of wraps it up in terms of looking at the iShares MSCI US Quality Factor ETF. Overall, it doesn't seem that the product, despite having this 40 billion of assets, seems to be much more attractive than the benchmark from a volatility perspective, drawdown perspective. Sure, and sometimes it did do better, but not consistently. And that might be simply a function of it being too diversified, not being concentrated enough. And also a little bit portfolio construction with regards to the sectoral overweights. So overall, it's a cheap product with 15 basis points. There's not much to argue about that. But it seems to be too close to the index. And there's plenty of other strategies that makes more sense in terms of diversifying, in terms of, like if you want to reduce your equity exposure and put into bonds, managed futures, and other strategies that just offer high diversification benefits. So that's kind of our short review on this quality ETF. Hope that was useful. Have a nice day.